Welcome back to Talk Tickers, the podcast that breaks down earnings calls.
So you don't have to.
So you don't have to do the hard work.
Exactly.
We do it for you. Today we are diving into DaVita's Q4 2024 performance.
It's a good one.
Now I know what you're thinking.
Dialysis.
Dialysis.
Not the most exciting.
Not exactly the sexiest sector out there, but trust me, this one's got it all.
It's got it all.
Hurricane's international intrigue, even a dash of medication mystery.
It's a real thriller.
So buckle up.
Yeah, this isn't just about numbers. It's about DaVita's strategy in a rapidly changing healthcare landscape. They're celebrating their 25th anniversary.
Wow, 25 years.
But they're not resting on their laurels.
No, they are not. So bottom line up front, how'd they do?
They beat expectations.
Really?
Both adjusted operating income and adjusted EPS.
Okay.
Showing resilience and growth even with some serious curveballs thrown their way in 2024.
Okay, color me intrigued.
Yeah.
Let's break it down. What were some of the big wins?
Big wins. Their U.S. dialysis business saw a boost in revenue per treatment, which is key.
Yeah.
This was driven by some smart moves.
Okay.
In their revenue cycle operations, better collections and favorable contracting.
So they're getting more efficient at managing their revenue.
Exactly.
That's impressive, especially since they face some headwinds with patient volume growth.
Exactly. While volume was positive for the first time since the pandemic.
Okay, that's good.
Which is good news. It was still below what analysts were expecting.
Interesting. Why was that?
A few reasons. Elevated mortality and mistreatment rates are playing a role.
Okay.
And then there's Hurricane Helene. That storm really shook things up.
Yeah.
Causing supply constraints for peritoneal dialysis solutions.
Hurricane Helene, it seems like that hurricane had a ripple effect across several industries.
It certainly did.
Really did.
But back to DaVita, they didn't just sit back and let these challenges overwhelm them. They doubled down on efficiency and cost-saving measures to manage expenses.
So they're playing both offense and defense here, trying to maximize revenue while keeping costs in check. Make sense? What else stood out to you?
Their international expansion is worth watching. They completed 3 acquisitions in Latin America, and they've got their sights set on Brazil with a pending acquisition in 2025.
Wow.
They're thinking big and broadening their horizons.
They're not just a U.S. dialysis company anymore, that's for sure. What about their integrated kidney care segment?
Yeah, the IKC.
IKC, how's that playing out?
It's definitely a long game, but they're making progress. IKC reported an adjusted operating loss of $35 million for 2024. But remember, they're focused on building a model that prioritizes patient outcomes and controls costs over the long haul.
So a bit of a loss leader for now, but with the potential for big returns down the line, it sounds like they're really trying to position themselves as the leader in the evolving kidney care landscape.
Absolutely. They're looking beyond just dialysis and thinking about the whole spectrum of kidney care, which is smart.
Okay, so we've talked about some of the wins and the strategic moves, but let's get back to Hurricane Helene for a second. Just how big of an impact did that storm have?
Well, remember Baxter's North Cove facility? The one that had temporarily shut down?
Right.
That alone cost DaVita about $6 million in operating income during Q4.
Ouch, I bet those ceiling costs skyrocketed. And what about the patients who rely on those peritoneal dialysis solutions?
Yeah, there were definitely some disruptions there. Fewer patient starts because of the supply shortage, plus their home caregivers were dealing with the aftermath of the hurricane themselves. It's a good example of how these real-world events can have a direct impact on a company's bottom line.
Yeah, no kidding. It seems like DaVita was able to mitigate some of the damage, though.
They did, and their new home patient admissions are back to historical levels.
Okay.
But here's the catch. That disruption in new PD starts during Q4 is going to have a knock-on effect impacting volume growth in 2025. They're estimating a $30 million hit to adjusted operating income next year because of it.
Wow. So Hurricane Helene is still looming large, even months later.
It just goes to show how interconnected everything is and how these unexpected events can have long-lasting consequences.
Yeah, for sure. Okay, so we've got hurricanes, international expansion. What else is brewing in the DaVita world? What about this whole medication shakeup I keep hearing about?
Ah, yes. This is a big one. We're talking about the shift of oral drugs from Medicare Part D to the dialysis benefit Part B, which kicked in on January 1st of this year.
Okay, break that down for me. What does it mean for DaVita and more importantly, for patients?
It's potentially a game changer for dialysis patients because it expands access to therapy.
Mm-hmm.
We could see up to 20% more patients eligible for these medications,
wow.
including those crucial phosphate binders. That means more support from dietitians and access to both brand name and generic options.
Sounds like a win for patients.
It is.
But I know there's always another side to the coin.
Yeah.
What's the catch for DaVita?
The financial impact is still a big question mark. DaVita estimates that their operating income could be anywhere from $0 to $50 million in 2025 because of this change. That's a pretty wide range.
Why such a big spread?
It's hard to predict the exact medication mix that patients will choose, how well they'll adhere to their treatment plans, and how smoothly the policy rollout will go.
Right.
It's early days, so there are a lot of moving parts.
So a lot of uncertainty,
Yes.
but also a lot of potential upside, right?
Exactly. This could be a significant growth driver for DaVita if they can navigate this transition effectively.
Okay, let's talk about the year ahead. What's DaVita's outlook for 2025?
They're projecting adjusted operating income growth of 5.2% and adjusted EPS growth of 11% at the midpoint. So after a strong 2023 and 2024, they're expecting to settle back into a more normal growth trajectory.
Okay, and what's driving that projected growth?
Strong revenue per treatment growth is key, which they estimate to be between 4.5% and 5.5% year over year. And they're also banking on their ongoing cost management efforts.
But I'm guessing patient volume growth is still a big question mark.
It is, and it's something that could make or break their performance in 2025.
Right.
They're assuming flat treatment volume growth compared to 2024 for their midpoint guidance.
So no major turnaround expected there. Why the flat projection?
They're not expecting significant changes in the underlying drivers of admissions mortality and mistreatment rates. Basically more of the same compared to recent trends. Plus, they're facing a couple of 2025 specific headwinds.
Okay.
The leap year effect from 2024, which will shave off some growth, and you guessed it, the lingering impact of Hurricane Helene and those disrupted PD admissions.
Right, Hurricane Helene, the gift that keeps on giving.
I know, right?
So it sounds like they're being realistic, maybe even a bit cautious in their outlook.
I think that's fair to say. They're acknowledging the challenges while also highlighting their strengths.
Speaking of strengths, how are they approaching capital allocation?
They're sticking with their consistent strategy,
Okay.
prioritizing capital-efficient growth both through internal investments and potential M&A. They're aiming for a leverage ratio between 3 and 3.5 times EBITDA, and any excess capital will be returned to shareholders through share repurchases.
So a balanced approach that prioritizes both growth and returns. Makes sense. Now, before we wrap up this part of our DaVita deep dive, there's one more debate we need to touch on. The impact of those SGLT2 inhibitors on end-stage renal disease, or ESRD, and treatment volumes. Seems like everyone's got an opinion on this. What's DaVita's take?
That's a good question, and their stance is interesting. The data shows flat ESRD incidence in 2024, which, tracks with DaVita's relatively flat treatment volume growth. But they're not convinced that SGLT2 inhibitors are having a significant impact on their patient population right now.
Hold on, really? It seems like some analysts are pointing to these drugs as a potential game changer. What's DaVita's reasoning?
Well, their physician network is telling them that the prevalence and adherence rates for advanced CKD patients taking these medications are pretty low, so they're not seeing a widespread impact yet. Plus, they believe any potential decrease in admissions due to these drugs might be offset by improved mortality rates. In other words, these medications could be extending lives, even if they're not drastically reducing the number of people progressing to ESRD.
So a nuanced perspective.
Yeah.
They're not dismissing the potential of these drugs, but they're also not jumping on the bandwagon without more data.
Exactly. They're taking a data-driven approach and relying on the expertise of their physician network.
Okay, that's a good place to wrap up this part of our DaVita deep dive. We've covered a lot of ground, from hurricanes to international expansion to medication mysteries. But before we dive into the next part, it's time for everyone's favorite segment.
This is not financial advice, but...
Hit me with it. What's the outrageous yet plausible trade idea we're exploring today?
Well, they're already expanding internationally, right? But imagine if DaVita went all in on home dialysis. Like a futuristic tech-enabled experience that blows everything else out of the water.
Now you're talking. What would that look like?
Picture this, a sleek, user-friendly home dialysis system that seamlessly integrates with telehealth wearable technology, even personalized treatment plans powered by AI.
Okay. That's a bold vision, but I could see it happening.
Right. It could be a game changer. Attract younger patients, cut down on real estate costs. It's risky, but it could be the key to unlocking a whole new market for DaVita.
I like where your head's at. It's a gamble, but it fits with their history of innovation. All right, listeners, keep that thought in mind as we take a quick break. When we come back, we'll be digging even deeper into DaVita's numbers and their strategy for the year ahead. Stay tuned.
Yeah, absolutely. Welcome back to Talk Tickers. Before we went to break, we were riffing on DaVita's potential to revolutionize home dialysis. Now let's ground ourselves back in reality and take a closer look at the financials. Their fourth quarter adjusted operating income landed at $491 million, bringing the full year 2024 adjusted operating income to a solid $1.98 billion.
And earnings per share were looking pretty good too, right?
Absolutely. They hit $2.24 for Q4, which gives us a full year adjusted EPS of $9.68. Not bad, especially considering all the curveballs they had to deal with this past year. It speaks to their ability to execute even in a challenging environment.
Okay, those are some impressive numbers at a high level.
Yeah.
But the devil is in the details, right? Let's unpack some of the key metrics. What can you tell us about their treatment volume?
U.S. treatment volume saw a 30 basis point increase compared to Q4 of 2023. That sounds promising on the surface, but it's worth noting that treatments per day actually declined by 80 basis points compared to the same period last year.
So a bit of a mixed bag when it comes to volume. What's the story there?
Well, a few factors contributed to Q4 treatment volume falling short of expectations. Missed treatments were higher than anticipated, mainly due to the extreme weather events we saw towards the end of the year. Those disruptions knocked their year-over-year growth down by about 40 basis points.
It seems like Mother Nature wasn't on their side.
No, not really. And then on top of the weather issues, new to dialysis admissions were also lower than projected, partly because of, you guessed it, Hurricane Helene and its impact on those PD supplies.
Right, Hurricane Helene. That storm keeps coming back into the picture. But at least they saw some positive movement with their revenue per treatment, right?
Yes, that's a bright spot. Revenue per treatment went up by about $1 sequentially, largely driven by seasonality. This brought their full-year revenue per treatment growth to a healthy 3.7% compared to 2023.
So even with some volume challenges,
Yeah.
they're managing to extract more value from each treatment. That's encouraging. Now let's flip the coin and talk about costs. I know their patient care cost per treatment increased. What was the driver behind that?
It's a combination of factors, but seasonality plays a big role, especially when it comes to those health benefits and other field-related costs. Plus, they had higher sequential center closure costs, which didn't help.
And what about G&A expenses? Any surprises there?
Their G&A costs actually increased by $15 million quarter over quarter. But don't worry, this was in line with expectations. They typically see higher G&A spending in the fourth quarter. It's just a seasonal pattern.
Okay, so nothing to read into there. Now let's switch gears and zoom in on their international operations. Any notable developments there?
Their adjusted international operating income actually declined by $17 million compared to Q3. The main culprit, a $19 million reserve they recorded against aged accounts receivable in Brazil. That's a one-time hit, though. Their underlying international operations are still performing as expected.
So it's a bit of a speed bump in Brazil, but not a major derailment. Good to know. Now what about their integrated kidney care venture? They reported an adjusted operating loss of $35 million for 2024. How should we interpret that?
Remember, IKC is a long-term play for DaVita. It's about building a sustainable, integrated care model that focuses on both patient outcomes and cost efficiency. So while the full-year loss might raise some eyebrows, it actually came in about $15 million ahead of their expectations for 2024.
So they're exceeding expectations, even if it's still a loss.
Exactly. This beat was largely driven by some timing variations in revenue recognition from their value-based care contracts. There's always going to be some variability in this type of business.
It makes sense that it wouldn't be a straight line to profitability with a new venture like this. Okay, let's loop back to Hurricane Helene one last time, I promise.
Yeah.
We've talked about its impact on PD supplies and patient admissions, but did it have any other notable financial repercussions?
Definitely. That closure of Baxter's North Cove facility really cascaded through their operations. In Q4 alone, they took a roughly $6 million hit to operating income because of those hurricane-induced disruptions.
So break that down. What exactly were those disruptions?
We're talking about higher saline costs, fewer patient starts due to the limited availability of those PD solutions, and lower productivity from their home caregivers who were dealing with the storm's aftermath. It all adds up.
It's remarkable how one event can have such a ripple effect. But I guess that's the nature of business, right? Always having to adapt to the unexpected.
Okay, let's shift gears and look ahead to 2025. What are DaVita's key priorities and expectations for the year?
Their 2025 guidance is cautiously optimistic. They're projecting adjusted operating income between $2.01 billion and $2.16 billion. If you split the difference, that translates to about 5.2% year-over-year growth.
Mhm.
It reflects their confidence in navigating the healthcare landscape and capitalizing on new opportunities.
So steady growth despite the challenges. Let's dig into some of the specifics behind that guidance. Starting with treatment volume, what are their projections there? For treatment volume, their midpoint guidance assumes flat growth in 2025 compared to 2024. Now, I know that might sound underwhelming, but it's important to look at the bigger picture. They're not expecting major shifts in those core drivers of treatment volume admissions, mortality, and mistreatment rates. They're projecting those metrics to stay pretty stable compared to what we've seen in recent years.
So a steady-as-she-goes approach on the volume front. Are there any specific factors, good or bad, that they're baking into this flat growth assumption?
There are a couple of headwinds to keep in mind. First, we've got the leap year effect from 2024, which will create about a 50 basis point drag on growth in 2025. It's just a calendar quirk, but it has a real impact. And then, of course, we have the lingering effects of Hurricane Helene, particularly those disrupted PD admissions. That's expected to shave off another 15 to 20 basis points from their volume growth.
So a combination of calendar quirks and hurricane hangover is putting a damper on their volume expectations. What about their revenue per treatment? Are they expecting to see continued growth there?
They are. They're projecting a solid 4.5% to 5.5% increase in revenue per treatment year over year. This growth is driven by a few things: anticipated rate increases, ongoing improvements in their collections process, and expected shifts in payer mix.
Hold on, payer mix. You got to break that down for me.
Sure, payer mix refers to the different types of insurance plans that cover their patients. Think Medicare, private insurance, Medicaid changes, and the proportion of patients covered by different plans can affect how much DaVita gets reimbursed for each treatment.
Okay, that makes sense. So they're expecting a payer mix that will be more favorable to their bottom line. What else is driving that revenue per treatment growth?
Oh, and we can't forget about those new oral phosphate binder reimbursements. Those are expected to be a significant contributor to their revenue growth.
Right, because those medications are now covered under the dialysis benefit. Got it. So it sounds like they're pulling multiple levers to drive revenue growth, which is good to see. Now, on the flip side, what's their cost outlook? Specifically, patient care costs per treatment. What are they projecting there?
They're forecasting a 6% to 7% increase in patient care costs per treatment year over year. This increase is driven by a few factors, including the fact that those oral phosphate binders are now part of their reimbursement structure. Plus, there are the ongoing inflationary pressures on labor and other costs that everyone's dealing with. But they do expect some offset from declining center closure costs compared to 2024.
Okay, so it's a bit of a tug of war between rising costs and cost containment measures. What about their G&A expenses? Any major changes anticipated there?
They're projecting a modest 4% increase in U.S. dialysis G&A year over year. This is mainly driven by strategic investments in their teams, their capabilities, and their processes. Basically, they're continuing to enhance their operational infrastructure to support their future growth. The good news is this increase will be partially offset by a decline in center closure costs compared to 2024.
So they're making strategic investments, but also keeping an eye on the bottom line. It's a balancing act. Now let's turn our attention to their integrated kidney care segment. What's their outlook for IKC in 2025?
They're projecting relatively flat year-over-year adjusted operating income for their IKC business compared to 2024. This is in line with their previous expectations, with one notable exception. They've actually accelerated $10 million to $15 million in value-based care revenue from 2025 to 2024.
Interesting. What's behind that shift in timing?
It reflects their evolving approach to revenue recognition in this segment. As they gain more experience with IKC, they're fine-tuning their practices.
It makes sense that they'd refine things as they go. It's still a relatively new area for them.
Okay.
What about their international operations? What are their expectations there for 2025?
They're expecting robust growth in their international segment, projecting around $50 million in year-over-year adjusted operating income growth. This growth is fueled by a few things: the impact of those recent Latin American acquisitions, the reversal of that reserve against aged accounts receivable in Brazil that we talked about earlier, and continued organic growth in their existing international markets. They're definitely bullish on their international expansion strategy.
And those investments are starting to pay off. Now let's talk about earnings per share. What are their projections for 2025?
They're projecting adjusted earnings per share between $10.20 and $11.30. If we look at the midpoint, that represents an 11% growth compared to 2024. That's pretty impressive.
So what's driving that EPS growth?
It's mainly driven by their anticipated increase in adjusted operating income, plus the impact of their share buyback program. They're reducing their share count, which boosts earnings per share, but this growth will be partially offset by the full-year impact of higher debt expenses.
Right, because they've been using debt to finance some of those acquisitions.
Hmm.
Okay, so a solid EPS outlook, but with some factors to keep in mind. What about their free cash flow projections? How are they looking at cash generation in 2025?
They're projecting free cash flow between $1 billion and $1.25 billion for 2025. It's a pretty wide range, which reflects the inherent variability in working capital adjustments that can happen at year-end.
So, bit of a wild card there.
Yeah.
But it's a metric worth watching closely, right?
Absolutely. Free cash flow gives us insight into their ability to fund future investments and return capital to shareholders.
Now let's talk about their capital allocation strategy. How are they planning to deploy their capital in 2025?
They're sticking with their consistent and balanced approach, prioritizing both growth and shareholder returns. Their top priority is investing in capital-efficient growth opportunities, both internally and through potential M&A transactions.
So they're being opportunistic when it comes to M&A, but what are some of their other capital allocation priorities?
They're also committed to maintaining a prudent leverage ratio, targeting a range of 3 to 3.5 times EBITDA. This shows their discipline and their focus on a healthy balance sheet. And of course, any excess capital beyond those growth investments and debt management objectives will be returned to shareholders through share repurchases.
So a shareholder-friendly approach. They're trying to have their cake and eat it too, growth and returns. Yeah. And now before we move on to that, this is not financial advice segment. There's one last topic. I want to revisit the debate surrounding SGLT2 inhibitors and their potential impact on end-stage renal disease incidence and treatment volumes. Where does DaVita stand on this issue?
It's a hot topic in the industry, and DaVita's stance is worth noting. They acknowledge that the U.S. RDS data shows flat ESRD incidence in 2024, which, as we've discussed, lines up with their relatively flat treatment volume growth. But here's the interesting part. They don't believe that SGLT2 inhibitors are significantly impacting their patient population at this stage.
Really, that seems to go against the grain of what a lot of people are saying. What's their rationale for that stance?
Their perspective is based on feedback from their physician network, which indicates that the prevalence and adherence rates for advanced CKD patients taking these medications are still pretty low, so they're not seeing a widespread impact yet.
So they're not ruling it out entirely, but they're also not convinced that it's a major factor at this point. It's a nuanced perspective.
It is, and it speaks to their cautious and data-driven approach. They're not jumping to conclusions.
That's a good quality to have in an industry as complex as healthcare.
Okay.
I think we've thoroughly dissected DaVita's financial performance and their outlook for 2025. Now it's time for the fun part, the part where we throw caution to the wind and let our imaginations run wild.
You know what that means? It's time for This Is Not Financial Advice, but...
Let's hear it. What's a bold prediction for today?
Well, we've talked a lot about DaVita's commitment to innovation and their focus on expanding access to care. What if they took that a step further and partnered with a major telehealth provider?
Intriguing. Tell me more.
Imagine if they teamed up with a company like Teladoc or Amwell to create a truly integrated telehealth platform for kidney care. It could revolutionize how patients manage their condition, especially those in rural areas or with limited access to specialized care.
That's a compelling idea. What would that look like in practice?
Patients could have virtual consultations with nephrologists, get their lab results reviewed, remotely receive personalized medication management support, and even access educational resources and support groups, all from the comfort of their own homes.
It would be a game changer for accessibility and convenience. And it aligns perfectly with the shift towards value-based care.
Exactly. It's about moving beyond the traditional brick-and-mortar model and meeting patients where they are.
I love it. It's a bold but completely plausible move that could really shake things up in the kidney care space.
And that's what This Is Not Financial Advice is all about, exploring those outside-the-box possibilities.
All right, listeners, that's a wrap on part 2 of our DaVita deep dive. But don't go anywhere. We'll be back after a quick break to wrap things up and share some final thoughts on this fascinating company. Welcome back to Talk Tickers. Before the break, we were tossing around some what-if scenarios, including a potential game-changing partnership between DaVita and a telehealth giant. But now let's zoom out and reflect on everything we've learned about DaVita today. What are your key takeaways from this deep dive?
Well, for me, DaVita's resilience stands out. They've been through a lot, the pandemic, supply chain disruptions, and let's not forget about Hurricane Helene. Yet they've consistently delivered strong financial results. They're adaptable and resourceful, and they know how to navigate uncertainty, which is crucial in today's world.
Yeah, it's like they've got a sixth sense for anticipating and overcoming challenges. Makes you wonder what they'll tackle next. What else impressed you?
Their unwavering commitment to innovation is remarkable. They're not content with just maintaining the status quo. They're constantly pushing boundaries and looking for ways to improve kidney care, whether through their international expansion investments in value-based care or exploration of cutting-edge technology like home dialysis. They're not afraid to take calculated risks, which is something I admire.
They seem to have that disrupt or be disrupted mentality, which is essential in healthcare today. Feels like they're playing chess while everyone else is playing checkers.
Exactly. And their focus on volume growth, despite the headwinds they're facing, shows a deep understanding of their business. They know that long-term success isn't just about squeezing more revenue out of each treatment, it's also about expanding their reach and serving more patients.
It's a smart strategy, but it's not easy to execute. It's especially in an industry as complex and regulated as healthcare.
It's a testament to their operational expertise and their ability to adapt to changing market dynamics. They're not just riding the wave, they're trying to create their own.
And let's not forget about their dedication to patient care. It's clear that it's more than just a talking point for them. They're actively seeking out ways to improve clinical outcomes, enhance the quality of life for their patients, and advocate for better policies. They seem to genuinely care about making a difference.
Their patient-centric approach is refreshing. It's a good reminder that at the heart of healthcare are real people with real needs. It's not just about the numbers, it's about improving lives.
Well said. Now, as we wrap up this deep dive into DaVita's world, what's one key insight you'll take away from this earnings call?
For me, it's DaVita's remarkable ability to balance stability and growth. They're a steady, reliable performer in a volatile industry, yet they're not afraid to embrace innovation and pursue new opportunities. They're both grounded and forward-thinking, which is a rare and powerful combination.
That's a great way to put it. They've got a solid foundation,
Yeah.
but they're not afraid to reach for the stars. And who knows, maybe their next big move will be that telehealth partnership we were dreaming up earlier.
It's definitely within the realm of possibility. And that's what makes following DaVita so interesting. Their journey is sure to be filled with both challenges and triumphs. But one thing's for certain, they're a force to be reckoned with in the ever-evolving world of kidney care.
DaVita's story is a testament to the power of resilience innovation and a genuine commitment to making a difference. Their next 25 years are sure to be just as fascinating as their first. And that's a wrap on this edition of Talk Tickers. Until next time, keep diving deep and stay informed.
We'll be here to guide you.